I have argued in previous sessions that we need Islamic banks to show real Islamic banking. But the current practice of Islamic banks is not real Islamic banking. Let us spend some time in understanding the current practice of Islamic banking and what is missing from it. The word banking includes several forms like central banking, commercial banking, retail banking, investment banking, development banking, international banking, etc. etc. Today, the focus is only on commercial banking, also called retail banking. Current practice of Islamic banking is Islamic counterpart of the modern commercial banking or Islamic counterpart of modern retail banking. Let us understand the current practice of Islamic banking in following dimensions: its concept, its objective, and its methods of achieving its objectives, the tools of achieving the objective. The concept. Banking is a business that provides the facility of safekeeping people's money and use this money with explicit or implicit permission of the depositors to give it to people who are short of finances to meet their needs, business needs, or consumption needs. The concept is simple. Some people have surplus money and some people are short of money. Banking manages making surplus money available to meet the needs of those who need it. Marketplace is used for this purpose. Market principle is to make profit for everyone. This is what banking does. In technical terms, it is called financial intermediation. Current practice of Islamic banking is based exactly on this concept. Muslims wanted an Islamic alternative to the interest-based commercial banking, and current practice of Islamic banking is the response. The objective. The objective of the banking business is to make money and let others make money. The same principle that live and let live. Those who are familiar with the terminology would know that banking business aims at promoting financial intermediation by reducing moral hazard, transaction costs, etc. And in this process, banks make money for themselves, that is for the owners of the bank. Bank let businessmen make money by providing them capital from depositors' money, and bank let depositors make money by sharing part of the money banks make from those whom they give depositors money to benefit. In short, banks help create wealth. Here, Islamic view becomes important. Islam is not against creating wealth. However, Islam requires that wealth creation should follow certain rules and norms. Wealth creation is created through fair and just means. Wealth creation should promote peace and harmony and avoid situations of disputes and conflicts in the society. Wealth should be made widely circulating in the economy, not circulating among the rich only. Wealth creation should accompany care for less privileged members of society. Wealth creation should not violate Islamic ethics and norms of business. These features that Islam requires in all business activities, including banking, are not found in the agenda of modern Islamic banking, and Islamic banking were expected to follow this agenda. Real Islamic banking thus can be done only by Islamic banks that have these objectives as their mission and vision. If we look at the charters of Islamic banks, we do not find any of these objectives spelled out in their mission or vision statement. The only thing that they aim at is to provide financial products that do not violate Sharia rules, at least in forms. Now let us see the tools for making money that banking business uses. Banking business uses two types of tools. One is borrowing and lending on interest, and the second tool is creating money. Let us see the money made by borrowing and lending. The banking business, the conventional banking business, has primarily one single tool to make money, and that tool is that banks borrow and lend on interest. Now, here also Islamic rules become important. Paying interest and receiving interest is prohibited. Islam allows making money by exchanging real goods or services in market, but disallows money to be made by merely exchanging money for money. Money has to pass through a real activity to make more money. Allah has permitted trade and has forbidden interest. This is written in the Quran. But it is much more than that. When it is a matter of making money or doing business in an economy, Islamic principles require fairness and justice and care for the less privileged member of society also. Current practice of Islamic banks recognizes this and claim that they do not borrow and lend nor they charge or receive interest. Though their dealings do not appear different in form or in spirit from the interest-based borrowing and lending of conventional banks, the Islamic banks claim that contractual documents underlying their dealings fulfill Sharia requirements, and Sharia scholars certify that. Common man's expectation was that Islamic banks dealing will be substantially better than conventional banks, and that Islamic banking will be more sympathetic towards meeting the needs of lesser privileged sections of the society. Lower economic classes will have better access to banks' money to help them improve their economic conditions. In short, Islamic banks were expected to adopt a different business model, but the similarity of their business model with the business model of conventional banks, interest-based banks, disappointed the common man in Muslim society. The second method of making money in the banking business is that banks create money. Banks create money out of nothing. What they do is simply issue checkbooks so that people may not withdraw money from bank when they want to use it. They can simply use checks while money stays within the banking network. In this way, when banks receive a deposit of say $100, they can lend people money much more than $100. They can do this up to $500 or even more just on the basis of $100 deposits. This is called money creation. So banks receive an interest on $500 or more and pay interest on $100 only. And the interest paid on deposits is much lower than the rate of interest charged by the banks to the customers who borrowed money from the bank. Imagine how much money banks are making. Imagine how much money those people are making who are allowed to benefit from the money of depositors, even after paying an interest rate much higher than what is paid to the depositor. And also imagine how much money depositors make from those imagine how much money depositors make from whose money banks and businesses benefit so much. Just take time to make your own calculations. Just take some hypothetical figures and see how banks, businesses, and depositors make money. This is basically an unjust system. Everybody is making a lot of money from the money of depositors, but depositors are getting very little and often negligible share in that. Sometimes they are even charged for depositing their money, while the banks and the businessmen are benefiting from their money. Also note that interest-based banks collect money from large number of depositors, usually belonging to lower income groups, and give it to a small number of clients using large businesses to benefit. The receivers of banks' money benefits a few richer businesses and the bank owners much more than what depositors get on the use of their money. Get these statistics from any conventional banks and you will know it. How unjust is the system? Now, what is Islamic teaching about it? There is no specific Sharia rule or fatwa yet available on this money creation thing, but several economists and policymakers believe that this is economic injustice. Also, with respect to money created by banks, economists do believe that benefits of money creation should only be used in the public interest, but it has never been put into practice in the modern banking. Islamic banking is following the same model that the conventional banks are following. This is obvious. The violation of this principle, لِكَيْ لَا دُولَةٌ بَيْنَ الْأَغْنِيَاءِ مِنْكُمْ. The Quran says that the wealth should not be a perpetual distribution among the rich from among you. But since Islamic banks are following the same model that conventional banking are following, so they are doing the same that conventional banks are doing. Islamic banks are no exception yet. It can, however, be argued that the context of Islamic principles that banks do not have a claim on this money because they do not do any real effort to earn in this income and to justify its ownership. The money created, as economists also believe, and that will be consistent with the Islamic teachings, that the money created should be a social money, the money that should be used for the benefit of the society, and in Islamic context, that money should be used for the less privileged members of the society. It was expected that Islamic banking will make wider circulation of wealth. Depositors' money and money created by banks will benefit larger number of people in the society. This dream is yet to come true. Islamic banks have yet to deal real Islamic banking. If they do not do it, then we cannot expect it from conventional banks who are taking over the market of Islamic banking. So far, the only difference between the current practice of Islamic banking and the conventional Islamic banking is that when they give the return to depositors and then when they receive return from the borrowers, they use the Islamic methods of receiving the returns, and those Islamic methods are in form not very different from what the interest-based banks used in terms of interest, receiving interest and charging interest. So a lot is needed to be done by Islamic banks if they are really interested in doing real Islamic banking. In the next session, then we'll go into this. What is the problem that Islamic banks cannot do it, and what can be done that Islamic banks go on the path of providing real Islamic banking activities.